Hi, welcome to another episode of 2 Minutes on Tuesday. I'm Sam Miller of REMAX Realty, and this week I want to answer a question that I've been asked a couple times recently, and that is, they heard the interest rates dropped 0.25%, and why is everybody making such a big deal about that? So I'll give you some examples of why this is significant. And it means different things to different people depending on what price range home they're wanting to buy. So as an example, 0.25%, I'm going to give you an example of a $300,000 loan, say a home loan, on a 30-year term, also referred to as a 360 payment. 6.25% interest, that payment would be around $1,847 a month for the actual mortgage loan amount. Now, if you were to take that exact same loan, same term, length of time, but drop the rate from 6.25% to 6%, so a 0.25% drop, the payment's going to go from about $1,847 to about $1,798. So roughly $50 a month savings. Now, this is where it gets interesting because most people don't make a big deal about saving $50 a month on a home when you look at, what the cost of homes are today. Where it becomes significant is when you go to the bank to qualify for the loan. It's much easier to qualify when the payment is less. It's much harder when the interest rates go up 0.25% because you have to earn more income in order to qualify for that higher payment. So what happens is one of two things. When the rates go down 0.25%, two different things can happen. One, you can earn less money and qualify for the same home. Or two, instead of buying a house at, and I'll make up a number, $275,000, you might be able to buy a house at $290,000 or $300,000 and have the payment the same. The difference is the interest rate. So your loan amount would be the same, but you'd either qualify for a more expensive home or you could buy the same home and have a lower monthly payment. Now, I'm going to give you something to think about. It wasn't all that long ago that our mortgage interest rates rose up when we had a lot of rapid inflation. They went up to 8.25%. So as I gave you those payments, the $300,000 loan at 6.25% was around $1,847. I gave you the other example of $300,000 at 6%, just a 0.25% reduction. It went from $1,847 to $1,798. When the rate was at 8.25%, that same loan, instead of being $1,798, was $2,253. So that just gives you an example of why interest rates make such a difference when it comes to buying a home, when it comes to qualifying for a home, and really the monthly payment that you pay each month during your ownership of the home. So when someone says, 0.25% doesn't sound like a lot, remember this video because it does make a difference. Even if it's an 1/8% reduction, it makes it easier to qualify and it is going to bring that payment down. When the rates go up, the exact opposite happens. Say you qualify for $300,000 loan and the rates go up, you're probably not going to qualify for $300 anymore. You might qualify for $290 or $280, depending on how high that rate goes. So keep that in mind. And always, if you have questions about getting pre-approved for a loan or how much you qualify to buy a home, give us a call, 740-397-7800. We're happy to help. Thanks until next week. Sam Miller, REMAX Realty. Have a good one.